If you follow housing news or you read a paper or you're just on the internet, you will have seen headlines like this. Dramatic increase. Foreclosure filings are up by more than 150%. So that begs the question, how will more foreclosures affect the real estate market? Are we about to see a tsunami of foreclosures and a struggling market similar to what happened in the last real estate market crash of 2008? The short answer is no. Foreclosures will start to increase again and have started to increase again, but it was expected and it will not impact your home value. It will, however, be traumatic for the people who are experiencing foreclosures. And for that, we can only try to support them with this information. Due to the combination of government support in the form of moratoriums against foreclosures over the last 2 years during the COVID pandemic, combined with incredibly low interest rates, does anybody remember 2.7? Hey, hold your hand up if you were lucky enough to lock in at that 2.7 or 2.6, whatever that was. And the influx of eager home buyers with the millennials coming out and buying all their first-time homes, as well as the exodus from the cities during COVID, we just came through a housing boom like no other. However, the various foreclosure moratoriums that protected people from financial disruptions during COVID are now ending, and the number of foreclosures is increasing. While if you've been watching any of my videos, you have seen the chart showing how many people came out of foreclosure, and it was more than 80% came out of those moratoriums having paid off their loans or created a workaround or refinanced, done something with their loan to get it out of trouble. There are about 18 to 20% of people that we are still worried about, and some of those are becoming foreclosures now. Bear in mind, though, when we see a headline that says 150% increase, if I have one foreclosure and then the next week I have two foreclosures, that's 100% increase. That percentage number is a data point and it doesn't have any value if it's not taken into context. Even with the increase that we're experiencing right now, we are not at normal rates of foreclosure in this country. Due to the small number of foreclosures in the last few years, the large percentages we're seeing are because there were no foreclosures for any period of time for 2 years. So now that some people are exiting these moratorium programs and haven't corrected their situation for whatever reason. Some can't, some didn't take advantage of workarounds, and some just, they just were not able to. We are seeing a spike as the number of foreclosures in this country returns to what is considered normal levels of foreclosure in the United States. Now, there is a possible upside to this. Foreclosures can help alleviate our historically tight inventory in this market. There are only 1,037,000 units for sale in the entire country right now. That is the lowest inventory level on record for the United States. Frustrated buyers may have opportunity with a little more inventory as homes that have been protected through moratoriums come back out onto the market for foreclosure. Does that mean these foreclosures are going to be deals? Probably not. Home values are extremely high. The bank knows they can sell for market value or above unless that house has been abandoned. And unlike in 2008, we're not seeing this massive amount of inventory hit the banks where they don't have the infrastructure to manage homes and keep homes clean and do that. So these homes are probably lived in fairly good condition and entering into an extremely tight housing market, meaning demand will be much higher for even those foreclosed properties than it was in 2008. So it can be a boon to people who are looking to buy. It is, of course, a tragedy for those who have lost their home to foreclosure. And it's probably not going to be this flood of houses that are half the asking price of market price. So that is the big picture with the current current increase in the number of foreclosures should not impact your housing value because there's still not enough inventory, and because there aren't even enough homes to potentially go into foreclosure to alleviate all of the demand for housing. If you have any questions, if you like this video, go ahead and hit that like button and let us know that you like this. Subscribe with the big red button and hit that bell so that you'll get notified anytime we put a new video out. I'm SandiWarner with Warner Realty Group, making the complex simple.